I get asked pretty repetitively if we're entering another era of stagflation. Now, stagflation is a phrase that basically got coined in the 1970s. And so an awful lot of people who were young, like I was in the 1970s, young in business, now I'm in my 70s, and a lot of investors in their 70s, and the investor class think back to that time period quite readily, and they think of stagflation. And a lot of young people have heard the phrase stagflation, never really lived through it, and think, oh my gosh, that must be just terrible, and what have you. Now, the reality is, could be terrible. Could be we're about to enter it. Do I really know? No, I don't. Do I think we are likely to be in an era of stagflation? No, I do not. Can I be certain of that? No, I cannot. The reality of stagflation is it comes from a world that, not just in America, but around the world, because prices are set globally. They're not just set in one country in a world of free trade. But stagflation comes from a world where at every phase of expectation of future problem, central banks move to increase the quantity of money a little more, and a little more, and a little more at a slightly accelerating rate. So you get rising inflation that won't go away, and there's more fear of downside in the economy than there is of inflation. The governments of the world tied to COVID made some wrong-headed mistakes. Not terribly surprising in a chaotic period like COVID that would be true. And that has created inflationary problems. The Ukraine war adds to that. But we do have a lot of fear right now of inflation, and central bank lending as we speak is not actually highly inflationary oriented. My suspicion, because that's true, and the right way to see that is that the real quantity of money, and I've talked about this many times in the past, and I'm not going to belabor the point now, but the measurements of the quantity of money are actually not very accurate today. They're less accurate than they used to be because of the ways money's actually used. Money is and only is whatever it is that we use to actually buy and sell stuff and services. Stuff, whether it's consumer goods or industrial goods or securities or buying crypto or whatever it is we might buy, goods, services, stuff, money is what we use for that. What's thought of as money often that isn't used for that isn't really money. And money is created in a system, a Western system like ours, by the net banking system increasing outstanding loans. So what you really do is look to net lending to see what's going on with the creation of money. It's a pretty tight measure. It's the best measure. And that's actually growing at a fairly okay rate. It was growing at about 4%, which is not inflationary, earlier this year, and has accelerated in the last couple of months as the short end of the yield curve has gotten steeper, a point no one has noticed, incenting banks to lend to a little over 5%, was 5% in the first quarter. And that's consistent with a little inflation, but it's not consistent with a lot of inflation. If the economy's grown at a couple of percent and you increase the real quantity of money by about 5%, maybe you got about 3% inflation, which is, of course, real consistent with the long-term bond rate. Is that stagflation, 3% inflation? I don't think so. It's a little above the Fed's long-term target of 2%. So the reality is I don't think we are going to have stagflation. I think we have a lot of fear of high inflation rates. That's why you see it so much in the media as it's spiked, tied to the aftermath of all the COVID in and outs and rules and funny, strange things that governments around the world have done from every part of the world, as well as dislocations created by the sanctions tied to the Ukraine war and other features tied to the Ukraine war. But all those will pass, and I think we will see this inflation spike go away. I think it'll take a little longer than anyone would like, but that's not stagflation. That's a spike in inflation. And it should be, with time, patiently transitory, and go away and revert to lower levels. Do I think the economy is stagnated? No, the economy is growing around the world. It's not growing robustly, but it's growing around the world, and that's also not part of stagflation. So I don't think we're going to have that. We're not in that. The fear of it is actually a healthy sign, because fear of false factors always bullish, and I want to thank you for listening to me on this.
Subscribe to the Fisher Investment YouTube channel if you like what you've seen. Click the bell to be notified as soon as we publish new videos.